This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
Yeah, so when it comes down to like some of the fees, because a lot of people always disqualify themselves like, well, my contractor's not going to pay the fees, or, you know, he's going to put it on me. I negotiate those fees in between, or have them pay it, or tell them to include it in their bid. But long story short, I mean, it's really whatever fees it is, it's really your insurance plan too. And anybody that's just getting started into real estate, I highly encourage, like, it is notorious. Almost every single real estate investor out there has been screwed over by a contractor or two.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. You know, there's many ways to get the money you need to get into, operated, and rehab deals. It's all about using the right tools, learning how to apply business credit to get there. Now, as someone who's personally applied these methods, I can tell you that you can utilize credit to grow your real estate business. Now, our next guest knows all about this. He has a thriving credit repair business and also a trade lines company as well. But he prefers teaching people the credit hacks that he's been applying for years, such as building huge credit lines for both personal and business credits up to 7 figures. Now, these same techniques can also be used to create millions of points equivalent to cash to get travel, and for using these points for other opportunities as well related to credit. So additionally, he's also the host of the Ready, Set, Go Real Estate Investing podcast, where he shares how you can invest in real estate successfully with little to no money using credit. Now, with all that, I'd like to welcome Brandon Elliott to the show. Brandon, buddy, thanks for coming on, man.
Augustino, what's up, man? Dude, I'm so thankful for having me. How you been?
Yeah.
How you doing today?
Good, man. I'm glad you're here. I'm glad, I think the audience is going to love what you have to say today. So, but guys, if you like what Brandon has to say, you can reach him via his contact page at BrandonElliottInvestments.com.
Yep. So, yeah, that and CreditCounselElite.com is probably a great resource.
Yes. Check out that website as well. Yes. So, all right, Brandon, go ahead. Tell listeners a little bit about your journey. How'd you get started in all this?
Oh, all right. So how I got started. First off, I'm from New Jersey originally. I live out here in sunny San Diego, California, though. I fell in love with it. Basically, how I grew up was just a little screw up, right? Just misguided. Had no father figure. My mom, manic depressive bipolar. And so at a very young age, I knew I had to grow up very quick. Got my hands into smoking weed. Ended up finding my path, going down the wrong path. And how basically after a while, I ended up having an explosion in my apartment making hash oil. So really stupid, really crazy. And it was because I was like selling at the time. I had 1 foot out, 1 foot in the restaurant industry, but I just didn't know any better, right? I didn't have the guidance. When I had that explosion, it changed my life because I was in the hospital. I burnt 40% of my body. They induced me into a full coma for a week. I had to learn how to walk again. I was facing criminal charges. It was crazy. So long story short, later years on, I ended up getting house arrest after fighting it in court. And I had a mentor during the court process because we pushed it back about 2 years. During that time, I got like life speaking into me, and I really started understanding, if I could be successful being stupid as hell, just to be very blunt with you, was stupid as hell in the wrong area, going down the wrong path. I could do anything I put my mind to on the right path. And I just needed to be around good people that could like show me like, hey, moron, like you ever think about real estate or anything else? And I just didn't know any better. Like you don't know what you don't know, right? So when I got around good people, they started showing me these opportunities. I was doing door knocking for Kirby vacuum cleaners at the time. Talk about a hustle. So that was fun. It was good though. I really enjoyed it. And I got recruited into a real estate investment company back in 2012, going over NOD, so notice of defaults, pre-foreclosures. It was very, very trending at the time, unfortunately. And that's where I got a little bit of education, but I got a heck of a lot more motivation. And long story short, years later, I started just diving into the content. And I was studying 4 hours a day, every single day for 2 full years before I finally got the confidence and the boldness. And quite frankly, I was tired of all my offers getting declined out here in San Diego because I was going against real investors, stuff that I do today, like all cash, no contingencies, put 50,000, earnest money down hard right away and close in 7 to 10 days, So I got started over in Ohio and doing the BRRRR strategy. I fell in love with it. It's all about the value add. And I just didn't have money to get started though. So I figured out credit. I didn't know, like, come from American poor family. We still had handouts, Section 8 helping and so forth. But it's not like other countries, right? So very blessed.
Yeah, it's a little different, yeah.
But, I didn't have family. I didn't have friends that were wealthy at the time, and I had credit though. And I started, the more research I did on real estate, I was getting addicted to it. Same thing with credit. And it just started opening up my eyes and I figured out ways to leverage it. And I've been able to build up a portfolio with it over in Ohio. We've done other states as well. I've got out of those states. We do fix and flips locally here in San Diego. We do the BRRRR strategy out here as well in San Diego. But to make it work, we do short-term rentals to make, all the price points are $1 million plus out here. You got to bring in more income.
It's the only way that works. Yeah. It's the only way that works. Yeah.
But it's been a blessing. And over the years, we've created Credit Counsel Elite as well because we were showing people were interested in how the heck are we doing this 3,000 miles away or getting into real estate. And we showed them how to do it with credit.
Nice. So let's go back to when you're talking about jumping into Ohio and buying. It sounds like your first deals were here in Ohio, right?
Yeah, in Ohio.
So
yeah,
that's cool. Were they in Cleveland or?
No, they're in a small little area closer to Pittsburgh, Pennsylvania, right on the river. It's Steubenville.
Okay, good. So at the time you had no cash, but it sounds like you had decent credit or at least some of the means to get credit. So exactly how did you apply credit to get those homes? Like most people think of just using their credit cards, which is, I guess, an option, but you may have something different in mind there, right?
Actually, that's exactly what I did. I used credit cards.
Okay.
So I figured out how to liquidate credit cards, the credit lines on there, into cash and put it in my bank account. That allowed me to wire funds into escrow to close, as well as complete my renovations with contractors. And that also, I quickly learned, my first deal, I got smacked in the face about a dozen times. I went through 5 contractors a full year later, and it finally got done. Spent way too much, got ripped off by several contractors, young, dumb, and from 3,000 miles away in California, they took advantage, which rightfully so. Not right, but it makes sense.
It's expected. Yeah, it's expected. Yeah.
So afterwards, and I was using credit cards at the time, but I wasn't doing it the right way that I do now for protection. Now I literally, for all payments, credit card or contractor related, I always, they're swiping the credit cards. That gives me protection, racks up points, easier accounting. Not easier, it's accounting. And then, but it gives you protection instead of me chasing down a contractor that ran off with my money or try to fight it in court. I can make a simple call to be able to take care of things.
It's interesting because you're delineating swipe versus giving the numbers over the phone. Two different scenarios, two different rates.
Yeah.
In most cases, right?
Yep.
That's right.
Yeah. So when it comes down to like some of the fees, because a lot of people always disqualify themselves like, well, my contractor's not going to pay the fees, or, he's going to put it on me. I negotiate those fees in between, or have them pay it, or tell them to include it in their bid. But long story short, I mean, it's really whatever fees it is, it's really your insurance plan too. And anybody that's just getting started into real estate, I highly encourage, it is notorious. Almost every single real estate investor out there has been screwed over by a contractor or two. It's notorious. So if you want to try to avoid that learning curve, a damn near guarantee to do that is pay with credit card.
Hey, Augustino here, and I would love to connect directly with you. Text the word books to 844-428-1344 to receive weekly book recommendations from me.
Yeah, that's right. So there's some sort of recourse. If the guy ends up skipping, you can always file a complaint with a credit card and pull that cash back. I mean, it's messy. Nobody really wants to do that. Yeah. So that's a whole other show about picking the right contractor. Yeah, that's a whole other show.
It is.
Right. But yes. So good. So it sounds to me like you're able to build up some credit on the credit cards. But how did you get to those bigger amounts? Because I can imagine. Maybe in Steubenville, you could probably pick up a house for $40,000, $50,000, maybe, right? I don't know what it was back then when you were doing it, but
so my very first house I bought for $9,000. I put $30,000 into it, $35,000 into it. Yeah. Got no money into it afterwards, and I bought a triplex. So all these mortgages are like a couple $100, like $200-$300. Have no money into it, and they rent out for $1,000 to $1,100. So it's great cash flow, not much appreciation. So be mindful of that in your location, but, or, investing in the hood, because it's not Cleveland, Ohio. It's not appreciation, like other areas. But, 2 months later from my first property, I bought a triplex, and that kind of saved my butt on the first one while I had a lot of issues, because it was cash flowing right away. And I bought it for $60,500, put $7,000 into it. Did a cash out refinance 6 months later, and it appraised over $30,000. So,
nice.
I bought properties for $5,000 over there, though. I bought triplexes for $20,000, put $70,000 into it, and it appraised for $150,000. So, I mean, it's really just about the deals and the number at the end of the day. Getting creative.
Yeah, it's funny that you've identified. Cash flowing versus appreciation markets. Yeah. Right? Two different markets, and you know what you're buying. That's cool that you knew. At least you knew then. It's like, okay, I can buy this. I'm not going to get some crazy appreciation. You get some sort of appreciation when you turn, when you do a renovation or whatnot. That's different. But it's very different than, like, say, San Diego or New York or a Miami or whatever, right? So, two different things. And
also, like, appreciation the last couple of years for anybody nationwide. We're all getting a little appreciation no matter what hood you're in, right? But but in San Diego, it's a big difference. You're not going to cash flow crazy unless you're doing Airbnb and you can make it work. However, one of my properties last year alone out here in San Diego appreciated over $300,000. Wow. That's just one property. It's crazy.
Wow. That's nuts.
It's wild.
That's nuts. So how were you able to get your credit limits boosted up then? Because I imagine maybe, it sounds like you're a much younger dude. You don't really start off with, like, they don't hand you a $50,000 line of credit off the bat. Now, maybe they do today. I'm not really sure, but I can't. When I was a young guy, they didn't do that to me.
They didn't do it to me either. But we actually have some students that, if you do the right things, if you're educated properly, we got some students that are pulling $50K cards at 19 years old with no job.
Wow.
It's crazy. So you really just need to know how to position yourself in front of the banks. That's where Credit Counsel Elite has really empowered people to educate them, teach them how to fix credit quickly, build up massive lines of credit, and then put it to work and leverage it.
Nice. Is this something somewhat related to, like, asking for those credit increases every 6 months, even if they don't ask you if you want to increase? Because I'll get, like, every time I log in, they'll say, "Hey, do you want to increase your credit limit or whatever?"
Sure.
Is this? But this is outside of that. This is like you really hitting up the bank for these increases, right?
Well, so For my story, that's exactly what it was. It was requesting those credit limit increases as often as I could. A good rule of thumb across the board, roughly, is about every 6 months. But there's many companies like Discover, for example, that you can do every single month, every 30 days. American Express, every 3 to 4 months. It really just depends on the bank. But back then I didn't know any better. So it was all trial and error, and so just every 6 months I stayed on top of them, requesting it and kind of manifesting my future with stated income. Not getting carried away, but, not saying that, hey, I'm making, $30,000 a year in a restaurant.
Right.
I was telling them I'm a real estate investor and, we're making some money around here or anticipating to be.
Yeah. Well, I mean, you have the equity. The equity's sitting there, and if you know the equity is going to be there, you're going to free it up. So, that's cool. So, but everything you're talking about right now has a lot more to do with personal credit as opposed to business or corporate credit, right?
Correct.
And I think that is really where someone listening right now, if they're not taking advantage of corporate credit, they ought to be. And there's ways of building that too, right?
Yes.
There's ways of building that. So at what point did you discover that as the methodology, that was the right thing to be doing? Like, how'd you figure that out?
Yeah, it's embarrassing, man. It's one of my biggest regrets. I wish I would have jumped into a heck of a lot sooner because I waited for about 3 years. I just didn't know. And I went through all the learning curves. Like, I do the burst strategy. So if I'm putting it all on my personal credit cards, then when I go to do a cash out refinance, I have high utilization and the banks don't care. Even if I tell them like, yeah, but this is free and clear, I'm going, you guys can wire it to pay off the credit card. They don't care. They want to make sure that your score stays up high. It's not fluctuating up and down because you're almost maxed out or at 70%, So that's when I started identifying like, hey, I got to figure out this business credit thing. And after years of doing research and really diving in, mentors and everything else and trial and error, I started learning the techniques. And that's where, if you set it up properly and really just give it the right attention, it doesn't take much time, but man, it can set you up with some just massive lines of credit that isn't reporting to personal, which is amazing.
Yeah, no, it really is. I mean, and there's ways of setting it up too. I mean,
sure.
Aside from just going to, if you have a Chase account or whatever, your personal stuff is there, you can get a Chase business account. Sometimes they'll approve you, sometimes they don't. But what I found anyway, I'm sure you figured this out many times before too. It won't be the first time you heard this, but it's like I opened up Lowe's, Home Depot, Uline, all these industrial lines of credit with my LLC. The credits I haven't even tapped it yet. I mean, it's just sitting there. And then you go get the business credit that goes along with it, with your Chase account where all your banking is done. Then you go do that with B of A where I have banking there too. So it's kind of like it helps build up your credibility when you have, and then your business is actually, it could be self-sustaining, and more importantly, it does not get reported on your personal credit. It's huge.
It's game changing. I mean, honestly, if anybody is listening to this right now and taking notes, you definitely want to write this down. You want to focus on setting up your SEO, your search optimization, to be on point so that when the first thing a banker is going to do is Google your business, and you really want to pop up everywhere. Like you want to pop up your business name everywhere for the first couple pages. So you want to have, Google My Business on there. You want to have Yellow Pages, 401, social media presence, website. You can use Moz Local or even on Fiverr to be able to get onto about 100 other random websites you've never, ever heard of, but will help promote your business. And setting yourself up for success, apples to apples across the board, making sure it's all consistent, that will it'll be game changing. It's literally 90% of, you'll be in the top 1% just right there alone because nobody else is doing it properly. Afterwards, just like you mentioned, get all the trade lines you possibly can. It's going to make your account look sexy at that point. Then you can go to banks and start getting some funding. Yeah.
Because it's funny. The underwriters will definitely check check Google. They'll Google you, and they'll see if they see nothing, you get nothing.
It's a red flag. It's scary because they're like, who is this guy? Who's this business? We can't even find him online. Is he a legit business or not?
Right. So now, have you had students that have been denied any of this stuff? And then how are you able to switch to approvals? How were you able ever to do that?
Yeah, it's a great question. Of course, we've had denials. We've helped out almost, over 1,000 people at this point over the years with credit and real estate related, when it comes down to credit. At the end of the day, there's what's called a reconsideration line for credit cards or even just bank relationships. And you want to first, at the end of the day, if you really get the right education and set yourself up for success, you'll have a 90% approval odds, which will bring so much confidence to the average person. Just like, walking in, even if you don't get an instant approval and it's pending, or if they ask for more documentations back, you'll know in your heart, like, oh no, I just need to send this in and I'm good. And I've seen that in students, and that's an amazing accomplishment and just feeling in general. But that small percentage, if you don't set yourself up for success, then yeah, if you got denied, what you can do is hit the reconsideration line. You want to find out what the reason is that you're getting denied. The banks typically try to stack it up as many as possible. They're not just going to give you one reason. They typically try to stack 3 to 5 on there, many of which will be kind of BS, but there might be 1 or 2 that are legitimate. And that's where you really just got to overcome those and see what it's going to take to get that lending.
Yeah. Now, how do you avoid the hard credit pulls on your credit report versus a soft inquiry? For those that don't know, soft inquiry it doesn't count as doesn't count as a hard inquiry, which will pull down your credit score. A soft inquiry, I think it just pulls for less data, but enough data for them to make a decision. The hard pulls are a little more. Deeper dive.
It's going to make an impact on your score. Soft, it will show up on your credit report. You won't really be able to see it unless you ask for that, the 1,000-page report. But it's not going to make a difference. So we don't avoid that. There's definitely ways that you can get just soft inquiries or just judging on your business credit over time, but it's really the knowledge on the fix side. So like I mentioned, it's educate, fix, build, leverage, understanding how the banks and lenders are judging you. And then next, so you can fit within their box, next is fix. So whether you're in the 300 FICO score or 800 club, every single person needs a little bit of fixing, believe it or not. So then afterwards, once you go to build, we can show you to get to the mid 700s, get to the 800 club plus, and then do a mass apply, get 10, 20, 30, 40 credit cards at once. If you get all those hard inquiries on that, you just go back to fix and you remove all those hard inquiries. We have techniques to be able to do it within a couple hours, usually within 24 hours, and then worst case scenario, about 10 days.
Oh, wow. That's pretty cool. Yeah, because those hard inquiries stick around for, was it 9 months or something?
No, it's 2 years that it will stay on your credit report. Technically, it can stay on there for 2.5 years because once after the 2 years is up, the credit bureaus themselves, they have 6 months legally to be able to remove it. Usually they take it off fairly quickly within a month or so, but you don't, it's going to hurt your score wise anywhere from 1 to 5 points max within the first, month to 3, 6 months, 9 months. Like you mentioned, is kind of the cap when the score point wise hurts. However, once you get to a certain amount, like 6 to 9 plus, it's going to hurt you in a different category, in a aspect that, hey, this person's searching around for too much credit. That's risky to them. So it's a twofold part. Hard inquiries only make up 10% of your FICO. It's only 10%. Many people think it's a way bigger deal, but it can be if you have too many hard inquiries.
That's right. Yeah. I get a lot of those because we're talking in the green room a bit ago, and we're buying a lot of real estate right now. And yes, they slam my credit report all day long. Fortunately, I have a good score, so I don't worry about it all that much. But it's all there. You can see it.
Man, in real estate, or it's one of the things that breaks my heart. Real estate, as well as getting cars, like car dealerships, it happens to every single person. They don't know, so therefore they allow the dealer to run their credit. They give them the credit, their social security number, and man, they will pull anywhere from, a couple to 6, 10, 12, 15 hard inquiries. And it's like just off one. Right. And it's crazy. It will hurt you drastically. So it's important to get educated on how to remove all that instantly right afterwards. So it's not penalizing you for the long run.
That's right. No, that's a great advice there for sure. Yeah. So do you have any favorite credit cards? Because I know there's a bunch of them out there. I mean, I have some personal favorites. Sure. But I want to hear what you have to say about what are some of your favorite credit cards?
Honestly, it is the most popular question. What's the best credit card to get as a new person, or what's your favorite credit card out there? At the end of the day, all banks have very similar products, and they all compete against each other to have, the 0% interest card, or the cash rewards card, or the travels card, and so forth. They all have similar. It really comes down to the relationship that you have with the bank and how much they give you, or you taking advantage of those benefits. So if you're just very savvy and, with American Express, for example, Platinum card, there's about 1 trillion benefits. There's literally probably about 100 different benefits that you can choose on or pick or take advantage of, many of which people don't take advantage of. But if you really focus on all those, you could get way more value out of the cards than the annual fee. A lot of people overcomplicate the annual fee and think wow, it's so much, but you got to look at the benefits. It can easily cover those, that annual fee or much more. That's not my favorite card. There's plenty of, I guess it just depends on the topic. There's amazing 3% cashback cards, or even 4% cashback cards on everything purchases out there. But for travel card, I really like the Chase Sapphire Reserve. I think it's a great product, and it can help many people if you know how to use it properly.
If you know how to use it. I have that one. I have that one too, personally. It's a great card. Yeah.
There's insurance credit cards though out there as well, that if all you need to do is put that card on a monthly auto pay for your cell phone, for example, or when you're traveling for flights or even car rentals, you don't need to pay for insurance anymore. It automatically comes with it. If you lose your phone, damaged, stolen, you can get 3 new phones per year. Crazy.
Wow. With Sapphire?
Yeah.
I know.
Well, with the preferred Sapphire, and then you can same thing with the Reserve as well. Yeah. But there's certain cards out there that will give you those benefits.
Well, I'm going to look into that for sure.
Yeah.
That's really cool. I like that. Yeah, that one. I like the Venture card as well. It's also great for traveling with the Air Miles. Yep. It's phenomenal. They give you great miles. These are all paid cards, but to your point, I mean, if you use them for Uber, especially Uber, tolls, all this, anything related to travel, you get the money back.
Yeah, incentives. It's Uber credits on certain cases. There's a bunch of fun little things that you can take advantage of and have it absolutely free in many cases.
Yeah. And then if you're able to use, if you are using personal credit for some of these renovations, some of the things you're building in these homes, you're able to stack up tons of miles very quickly. Yes. Some of these, I think it was a long time ago when I got the Venture. Or not the Venture. Well, yeah, the Venture and the Sapphire. I think what was it? 70. You get 70,000 miles if you spend $4,000 or whatever. It's you could do that on a rehab quite easily.
Oh yeah. We're spending about 120 to 150 per rehab thousand out here. Yeah. And come on, it's that's enough points for a free vacation afterwards. So it's a good feeling to kind of have enough points to reward yourself after a remodel or whatever it is, and still know that you have the protection. That's right.
And you can also use those points to pay down debt as well. Some cards do that too. Yeah. So now, how are you able to use or cash out credit cards at 0%? I'm sure you've heard of that, right?
Yeah. So basically leveraging the debt on credit cards at 0% for 6, 12, 15, 18, 22 months, stuff like that.
Yeah.
Yeah. So there's many ways to do it. a lot of cards naturally come with that nowadays for, being a new card or brand new. They give you an introductory phase. There's others that you can simply just call in. If you have a relationship with the bank, you can simply call into them, ask them, hey, is there any benefits or perks or promotion offers behind the scenes that I'm not seeing? And sometimes there can be. And what's cool about it is if you have this is what I did in the beginning. And they were I was looking for money to get these real estate deals. And they were telling me, hey, you could talk to our mortgage department, or you can talk to our personal loan, business loan department. And I knew I couldn't qualify for any of those by working in a restaurant, not having my entity aged or anything like that. And just not having the credibility yet. So I asked them, hey, what about my credit cards? I realized that I have 4 credit cards with you guys. I have decent credit limits in total, a little over 100,000. If I combined all of my credit limits onto this one card, then I have 120,000 on this one card. Awesome. Is there any way that I could take advantage of that, the balance transfer offers, but instead of balancing, paying off other credit cards debt because I don't have any? Is there any way that you can just wire it into my bank account? And that's basically like a cash advance. However, they set it up in ways that it was basically like a balance transfer. It's just a flat fee, 2-3%. Now, I've done this with Bank of America, Chase, Wells Fargo, Citi does it as well. I mean, many of these banks can do this. And that was one technique that I've used. I've done manufacturer spending as well to liquidate credit cards in the past to be able to get those funds and put it to work as well.
And those are some big lenders you just mentioned too, because some of these guys don't want to do any of that stuff, right? I mean, the smaller lenders don't want to do that, like especially the credit unions. I mean, you may have a personal relationship with them, but the stuff you're talking about is much more sophisticated than what they would typically do, right?
Yeah. Now, what I would say is some credit unions are, banks that you don't want to sleep on though either. And I did for the first couple of years. And I've noticed over time, credit unions can be your best friend. They really can, because you can get huge lines from them. They are more willing to get more creative than the big institutions like Bank of America or Chase or Wells Fargo. So if you know how they're judging you, you build a relationship strong with them, you have some money coming in and out, and all these other, there's a lot of different moving parts behind this. But if you position yourself properly, you can get some big funding from them with creative type of options, setting up a CD, which I hate CDs, but it's idiotic, but
it is, yeah. I know.
But
I know.
sometimes setting up a CD, that creative lender might guide you to do so you can get a qualified for a loan, secured by that in many different creative ways that they'll actually double it. When if you didn't set up that CD, they would have denied you. So there's some cool little things that you can do, and I just like creative financing in general. I think it gets fun.
Nice. All right, well, we covered a lot of ground today. For someone listening right now, what sort of bulletproof advice would you offer that individual?
Yeah, man, focus on credit. I know that sounds so basic and simplified, but it can get very deep. It can get as deep as you'd like, but focus on credit, focus on business credit as well. If you the power behind credit can fund all of your goals, all of your dreams, right? If you have a money problem right now and you need capital, this is a great tool to be able to utilize, get several 6 figures, 7 figures very quickly, and put it to work.
Nice. Love it. All right, good. And I think there's a whole lot of great information also available on the Elite website, right?
Yeah. Credit Counsel Elite. We do a weekly webinar where we basically just dive into educating you on showing you the opportunities, the possibilities. We covered a little bit today, but really just a small fraction. You can, and in that webinar, it's about an hour and a half, and you can ask me any questions. It's all live. But that's where we dive deeper into it, and I cover about 60 to 70%, because the other stuff, it would just go over people's heads. So we make it bite size for everybody to really obtain it and see what is possible with it, which is amazing.
Awesome. Good. All right. Well, guys, if you want to reach out to Brandon, you can reach him via his website at
CreditCounselElite.com.
CreditCounselElite.com. Go there. Don't go to the other one.
Yeah.
Don't go to the other one. Excellent. All right. Well, hopefully you guys got some insight on how to leverage credit as another methodology to get into real estate and also rehab your deals that you're also working on as well. So, of course, you can syndicate. There's other ways to do it. There's many ways to skin the cat. You know what? Credit is one of those things that's often overlooked, and you too can get into it as well. Reach out to Brandon. He can certainly help you with that. Thanks for tuning in. I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.